Let's get started with Brian. Brian, go ahead. Tell us more about yourself and what you do.
Sure. So I'm a Jersey native, and I co-founded Alpha Venture Partners in New York in 2013, and we started investing in 2014. Alpha has a unique model where we invest only in mid-stage growth rounds. So typically a Series B, C, or D. We find the mid-stage growth round to be really, really attractive for returns because companies are staying private longer, and leading companies get much bigger in the private market than they did formerly. Like Amazon raised $48 million in a public offering. That'd be a Series C today. So the way we do it's really interesting for the entrepreneurs on the phone. We work with about 500 early stage VCs to be their opportunity fund. And so when they have a great growth company, for example, Jay might have a great growth company where he can't follow on in his pro rata or his investment rights, we'll form a partnership with Jay and invest using his information, his rights, his closeness to management, and Jay and we would share the carry or the profit. So we know all the early stage VCs in the country. If we could be helpful to folks on the phone, happy to be. I'm a Jersey biased guy. I think Jersey gets short shrift in the national news and in venture. And I think Jersey's biggest challenge is to attract great founders and entrepreneurs, because that's what made us great in the first place. And we've fallen a little bit behind on that, but not now. Now I think there's a great upcoming crop of founders and entrepreneurs and an emerging class of investors like Jay, who are investing early stage in New Jersey. And I think New Jersey is a phenomenal location for born in the USA or even born outside the USA companies that want to set up shop in the USA. I think there's no better place than New Jersey.
Great. Thank you, Brian. And Jay Bhatti?
Hi there. I'm one of the co-founders of BrandProject, which is an early stage studio that invests early in a lot of direct-to-consumer CPG type of companies. Some companies that you might have heard of include like Freshly, Daily Harvest, Pet Plate, Ritual, which is not the vitamin company, but the one that does the meal delivery, the meal ordering. And, you know, we've had a lot of success in investing in early stage companies in direct-to-consumer, partly because, you know, when we started this in 2013, you know, direct-to-consumer was just starting to take off, and it was a good time to be in that industry, especially in New York. I'm a New Jersey native as well, like Brian, and I grew up here my entire life, Rutgers graduate, and then I got my MBA from Wharton, and then, you know, I spent a decade out west, you know, first, you know, with Microsoft, which was my dream job after MBA, working in Seattle in corporate HQ, and then, you know, I spent 5 years in Silicon Valley where I started my own startup, and then I sold it after raising, you know, over 10 million in venture capital dollars for it. So I'm quite familiar with being a Silicon Valley entrepreneur and going through that entire experience, and then selling the company, and then, you know, working at a big company, the best tech company at that time out west. And then, you know, I came back to the East Coast, and because I felt like the opportunity was really going to be interesting in New York. And, you know, now I actually am very bullish about New Jersey for several reasons, which we'll probably go into this conversation.
Great. Thanks, Jay. All right, well, let's get into it, right? We're 6 months or 5 or 6 months into a pandemic, right? Clearly a downturn is in effect, recession, some say potential depression. Talk to us, each of you, because each of you have very interesting perspectives about how you see the landscape. Let's just say the landscape of business and entrepreneurship and investing. Let's just get into it, because this is what's on everyone's mind.
Well, I'll go first this time, but Jay, you go first next question, okay?
Yeah. Age before beauty.
So Alpha is really, really lucky because all the early stage VCs have a lot of battles to fight with their companies to do a reduction in workforce, cut costs, take care of business in what's a recessionary environment. So because we invest in growth stage companies, 95% of the capital we have in companies is in companies that have 18 months of cash runway, and are also, because we invested in counter-recessionary themes, are all either getting an immediate COVID lift or will get a quick growth return as soon as we're out of complete sheltering. So that's been great in terms of our day-to-day. We've been able to focus on our companies and not fighting fires. We've coined the phrase the essential economy as what defines what we're investing in. And you really have to ask yourself, are you building a product or a service that saves people so much time and money that it's essential? And we see all the companies, both in the public market and the private market, getting these lifts that are in the essential economy. You've got essential medicine and telemedicine. We're in a couple of telemedicine companies. You have essential e-commerce like GoPuff or Vroom, which just went public. You have essential enterprise like Secure or Gecko Robotics. These are all companies we're in. And I think increasingly you're going to have essential collaboration, education, future of work, which is a very difficult space heretofore to invest in, but I think it's becoming attractive. There are other obvious sectors in consumer products and in home delivered goods and services. So I think essentiality is a new key criteria that founders should be thinking about.
I'd have to agree with that. Like a lot of our, one thing that we got lucky in is that we've invested in a lot of companies that, are considered essential in today's time, like food companies, food delivery companies, companies that, give protein powders, for example, that have, like Gainful.com, which is, really done, which has had an interesting time during the last couple of months because, as people are not able to go out, as places like GNC and, Vitamin Shop have, shut their doors for a little bit, there's essential products that people need, whether it be elderly people who need protein, middle level, people who need food to a certain degree. So like we've been lucky in our portfolio that, a lot of our companies I would consider essential. And, our investment criteria is always like we look at what is something that people need that an existing player is not doing a great job of delivering or has let the brand or the product, age too much and not innovated. And if we find a founder and we find a product that they're building that's next generational and essential for consumer need, we love to invest in those types of companies. So we've seen a decent uptick in what we would call like, a necessity type of startups. And I think that, if there are any aspiring founders out there, you really want to think of, are you building a company that, even, you have a recession, you have a lot of uncertainty in the world and the markets, will people say, I still need this product because it's essential for me? I think that's a very important criteria that everyone needs to have going forward.
Great, thank you. So essentiality is critical. So tell us about funding, right? At this point in time, July 1st, 2020, what is the environment like for entrepreneurs who are within a company or starting a new company?
Let's have Jay start with early stage, and then we'll progress to mid stage, which is
early stage. It comes down to essentiality. I think like VCs still have the same dollars to invest right now because they raised their funds and closed their funds months ago, years ago, so they still have capital to deploy. And they want to deploy that capital. And what I'm finding is companies that are doing well during this period where like they pass that essentiality test, they're getting deals, they're getting funding, they're getting a lot of interest. And so what I'm seeing is the companies that are doing well, that are that are essential, more the VC energy is going towards them. And companies that might have been funded a year ago, for example, that would have gotten a good valuation a year ago, they're having a very tough time right now. So I've, talked to a lot of companies that just haven't, fared well during this time period because, their revenues have shrunk quite a lot because, whatever the product is, it's not needed, right? A good example that's very public right now is Away Luggage, for example. Like they lost 90% of their revenue, and Away Luggage is a next generation luggage company, right? And it was like a brand that's like, hey, these other brands didn't do a great job. We'll do something that's more in line with today's consumer and today's innovations. But when no one's traveling, no one's buying those luggages. So they're going through a lot of challenges right now. Hopefully that will change in the future, but it gives you an idea of how important, being a critical, needed business is.
Okay, Brian?
Well, macro picture, if you think about it, since the VCs have as much money as they ever did, and they can't really hang on to it, they need to maintain cadence, then if you are in an essential product or service, whether you're seed stage or you're mid stage, you actually have the best time to raise money because 60% of the companies are not invited right now. And so if you are in this essential category, or you can place yourself with solid evidence you're in an essential category, you have more capital that needs to go to work. You've got an advantage in raising money at this time. So I would be encouraged by that. A lot of, I think what we need to do on the fundraising side is get more serious about business models, margins, how do we make money, how do we build the business in a cash efficient way. Everyone's changed their stripes around cash efficiency and margins. That was already happening for a full year before we had COVID and this recession. Companies like Lime, which we're in, had completely turned their model so that they became profitable. So I would focus on those things. How do you evidence that your business is essential? Have the faith and the courage to know that there's actually less competition for capital if you are an essential bucket, and really come in with a story around business models, margin, cash efficiency. I think there's plenty of capital. People are taking meetings. I would add to this that if you're in any kind of enterprise sales, and or we're all in enterprise sales raising money, you've got to be persuasive online in these meetings, right? Now, I don't have my good camera up, and I apologize to all of you. I don't have my good camera up, but like when I do webinars like this, I use a Canon $600 camera, and I look much better, and I sound much better. So take very seriously how you and your sales team raise money and or conduct enterprise and partnership sales calls in Zoom, because it actually, when you master it, again, you have less competition. If people meet 10 people and 9 of them are ill-lit, hard to hear, difficult, don't have Zoom mastered, you're going to stand out. And so I think this is the time to get really good at sales and raising funds in this medium.
I'll quickly echo a point over here that Brian just said there, is that, you know, some of our founders, for example, have invested in more sophisticated setups for Zoom meetings, cameras, microphones, etc. And why is that? Because they're doing 95% of their business on Zoom now, or video conferencing of some nature, and especially fundraising. So they understand the critical nature of just having clarity of voice and clarity of communication. So I would definitely echo that over here.
Right. So that's really good advice. But a couple months ago, some investors were saying, maybe you should wait to start a business. So I just want to make sure we're clarifying this. Is now, you know, someone has a business idea, they're going to look for funding. Unless it's super essential and super, fills a pain point, should they necessarily wait or get on with it?
You know, and I'll take this one first. There's never a good or a bad time to start a business. You should start it when you're ready to do it. I mean, some of the best businesses in the world were created during very bad economic times, like Google, like Microsoft in the 70s. Google, if you read one of their books by one of their founders, they talk about how they were able to hire rock star engineers at much more affordable prices, because during the dot-com bust, they were one of the only companies that was making money and, you know, had capital in the Silicon Valley. So they built a great team. And a lot of the early founders or early employees of Google were like, wow, we could not even get a job today because all the people we're hiring now are so impressive and worked at all these startups that went belly up. So I really think that it comes down to the founder. I mean, trust me, like there's people that, like, when times are great, they won't want to start a company because like, hey, the market's doing well, my employer's doing well, I'm not leaving, right? And when the economy's doing bad, they'll be like, I'm not going to do a startup because there's no customers out there. I think start a company whenever you feel ready, and do not be shy at all to do it, even if the times are not, you know, perfect.
I completely echo what Jay has said. Now is the time to invest, and now is the time to start companies. You've got more talent available at lower costs. You have more people willing to put more skin in the game. However, don't do it unless you're an essential part of the economy. Just don't do it. So I think you've got to have that filter on. But if you have talent and deep expertise, and you want to start a company in the essential economy, I think this is the time to do it. In terms of being able to raise talent and capital and customers. I think those are the three main stakeholders of startups. I think the hardest challenge there is the customers at this time. So I would focus on customers first in essential businesses. And I agree with everything Jay said. And the same thing's true for venture guys. We all know that the greatest returns have been earned in the downturn. So at Alpha, we're raising a new fund now. We're going to deploy another 50, 60 million out of our existing fund. And we're going to raise a $100 million fund right now to do opportunistic special situations, because there's going to be many. And yeah, I think entrepreneurs should perform the same way.
Well, that's good to know. But let's talk about geography. How has the pandemic changed where one might start a business? Of course, they should all start business in New Jersey because it's a great place. But let's just think more broadly, whether it's nationally or globally. How important is geography?
It's a lot less important all of a sudden, right? So I think this remote taking of meetings by VCs and this remote fundraising, it's not going to snap back to the way it was ever. Because now that everyone and all the stakeholders, enterprise, business, small business, VCs, realize that they can get as much work, better work done through Zoom than in face-to-face meetings, it will only snap back part way. So I think that you can be anywhere. But, again, I put the order of importance: customers first, talent second, and so I think this gets down to why New Jersey is such a great environment. And Jay and others are working with the state to try and make it a tax advantage environment, which it is not yet, which is our biggest problem. New Jersey has slowed its pace of venture investing and startups, and also building growth companies compared to the rest of the nation, whereas it used to be a leader. And that's the engine of the economy. So we really need to get on that and create tax advantages for entrepreneurs. And the legislature's got to recognize these are not gifts for the rich. This is what creates jobs and draws talent and intelligence and a better gene pool even into our state, so that we can build a great state of great people. And then once you're here, you've got this underdog attitude. And gosh, if an entrepreneur needs anything, they need an underdog attitude. We're in the shadow of New York and the whole East Coast Metro. Well, guess what? We're also in the center of the East Coast Metro. This state is close to customers, whether you're selling to government or to pharma or to New York or to publishing, every industry. New Jersey's as close as any place in the world. So anyway, I think location's important based on customers, talent, and last capital. And you can work anywhere in the world.
Okay. Jay, you want to opine?
Yeah, I think, this recent, wave of events that's happened in 2020 will definitely change the scope of where people work and create startups. I was on a call yesterday where one of the founders was like, do I really want to have all my employees in New York City where they have to take public transport all the time and it's crowded office spaces, right? That question was never even thought of 8 months ago, 6 months ago. Now it's becoming a question. And when I look at it, I think there's an incredible opportunity for New Jersey to become, again, an innovation hub of the country. And there's a couple of things leading to it. One, we have pockets of innovation areas over here, from Bell Works to Newark and Newark Venture Partners, and, to Hoboken and Jersey City. There's a lot of pockets being built over here for innovation and tech, where founders can be like, hey, I can move here, I can drive to work, my family can go to a good school system here, and I don't have to go to private school in New York City. So I think there's a lot, that's one thing that we have an advantage of. The other thing is that, I think Governor Murphy is very much a pro-growth, pro-innovation governor. He's done that by, if you look at some of the innovations and the programs that he's trying to come out with, that gives me a lot of confidence in, the potential for New Jersey to win, a lot of startups wanting to be here. I'm on the board of a couple of startups that have bases in New Jersey. So I'm a big believer that New Jersey has that potential. And we have the talent pool, right? And, a lot of that talent pool goes to New York City every day, and it's not going to be doing that anymore, I think. So, if I were to make a bet, I think New Jersey has a real shot of becoming a top 5 destination for tech innovation in the next 10 to 15 years. It's not going to be easy. There's a lot of things that have to come right for it, but we have all those ingredients. There are a lot of places in the country that would love to just have the structural advantages that we have and the things the momentum we have going forward.
I couldn't agree more. And I think actually the way Governor Murphy has managed this crisis, I think reflects well on sort of the resilience of New Jersey, and I think will be a real positive for us going forward, frankly. Again, we proved it after Hurricane Sandy and did a really good job of being resilient, and I think this time as well. Knock on wood, let's hope we get through it. I know this is early days yet, but I hope we get through this pandemic. But I think so far, the state and our people have done a pretty good job. So I think that's a good tenet, good characteristic for other entrepreneurs to gravitate to in comparison to other areas of the country. Okay, so you mentioned advice book for entrepreneurs. Any other advice? I want to make sure we get all the advice on the table for entrepreneurs these days, whether they're already in a venture or whether they're starting a venture. Any other advice for them as they seek to grow their companies?
There you go first.
I think, right now there's a great talent of individuals out there looking for interesting opportunities, especially like, recent MBA graduates and stuff like that. So if I was a founder right now, I would, do my best to acquire a strong network of individuals that could work for my company, be partners with my company, because there's a lot of great talent out there available. So this is the time to be greedy for talent, right? So, find great people and network and, get to know people. And at the end of the day, everyone's basically sitting, networking on the phone or via video conference. So you can probably schedule things a lot more easily nowadays. So, we're looking at candidates in some of our companies that are, exceptional people that, a couple of months ago, I didn't think we'd have a shot at. Now we do. So I think talent is something that, don't underestimate the importance of having a really good team around you and take advantage of this opportunity.
Okay, how about you, Brian? Share with us just one thing for entrepreneurs.
Yeah, I think you've got to get your story down, and you got to know what investors are looking for. And I think we've kind of covered that. So then it's how well can you tell that story in 30 seconds, 3 minutes, 30 minutes, and being concise and getting the key positioning and points across in those time increments, and rehearsing in the shower and rehearsing with your mom and your girlfriend or vice versa. That I can't emphasize that enough, and getting good at Zoom to interview talents, sell to customers, and ultimately to secure investments.
Great. Thank you. So before we get to questions, I want to ask people to submit questions, but I also want to talk about Vroom. This is a big deal for you, Brian, and a great success story. Tell us about that story.
Well, we're extremely proud of Vroom. It's a New York company, and we're headquartered in New York, although we invest globally and mostly around the United States. It is the best way to buy a used car in existence, because it uses algorithms to scour the country for usually sub 2 or 3 year old cars, or cars coming off leases that are in immaculate shape. It certifies them like your local dealer would, and it ships it to you with a guarantee, including a money back guarantee. So if you're trying to sell a car, or you're trying to buy a car for your daughter or your college kid, it is the best way to do it. Well, COVID has given businesses like this a tremendous lift. When we invested, it was growing at 50% a year, like all of our companies are when we invest in them. But it slowed down to the 20s as it increased margin and got ready for its IPO. And then perfect timing, COVID has given this company a tremendous lift, where people don't want to interact with a dealer or with other private citizens in the buying and selling of cars. Well, the buying and selling of used cars is a relentless, almost recession-proof market. In fact, in some categories, used car marketplace goes up in a recession. So, right time, right place on what was really great technology and great leadership by CEO Paul Hennessy. Now, we have 8 more companies like Vroom on IPO tracks, and all the work we did over 6 years. We're really excited because Vroom's our first IPO. We've had a couple of big acquisitions to Uber, but we're excited to see all these companies go up public in the next 2 years. I just can't tell you which ones they are.
Thank you for that, Brian. And that's a really unique story that's replicated with other businesses, right? We talk about acceleration, disruption because of the pandemic. And some companies like Vroom have really been able to really take advantage of it. So I know Jay mentioned that he might have 1 or 2 or 3 companies that are also in that same sort of boat where they have benefited. Jay, do you want to speak to that, 1 or 2 examples where COVID has actually helped them?
Yeah, there's an example. We have a company called Clutch in Canada, which is kind of like Vroom, but for the Canada market. And, more people are now like, do I take public transport going forward? Do I rely on, they don't know if they're going to be able to rely on Uber or, any other car service, or they'll want to take them. So the demand for used cars across the country in Canada has gone up right there. So that's a good example of a business that's, become, more important, as Brian was mentioning, that, used cars are kind of recession proof over there. And we're seeing that on a global basis here.
Got it. So someone mentioned GoPuff. Talk to us about GoPuff. Many people, unless you're from South Jersey.
GoPuff is a Philadelphia headquartered company that put the 7-Eleven / beer store / corner store in the cloud. And it turns out that in a mobile shopping experience, people can get all the things they'd run down the corner to get quickly and efficiently within 20 minutes through GoPuff. And these are things like salty snacks, sweets, pop, beer, etc. GoPuff quickly became the largest vendor of beer in Philadelphia, right? So now it's replicated that story in 450 cities and 45 different DMAs. So it's on a tear, and we're very, very pleased. It is also what we would call essential e-commerce, right? So it's not selling luxury goods, it's not selling nice-to-haves, it's selling must-haves in a really convenient format where you also don't risk encounters with the COVID virus. And I think that's also true of our other e-commerce plays. One is Coupang, the Amazon of South Korea, which is actually a Delaware company with a US team, but they operate fully in South Korea. And Wish, which is the most popular discount shopping app on mobile in the world, has many more downloads and users than Amazon does. It sells essential goods from Asian manufacturers to cost-conscious consumers throughout the developed world.
Wow, and I guess we'll be looking for GoPuff to maybe sell just like Postmates did today, or they have some Uber, I think, was just made a.
And I think GoPuff's a better business. It's not just delivery. Like, delivery is a small part of what GoPuff does. Basically, it's saying, you know what? A commissary that could serve a certain square mile area, given density and demographics, is a better way to do convenience store goods than corner stores. It's vastly more cash efficient. And in a mobile shopping experience, people get everything they need, not just what they wanted on impulse. So it increases the shopping basket from an average, say, $10 to about $25. So it's just a way more efficient model for the things that take up space in convenience stores.
Got it. And that's a great story out of Philly, right? And
that's a great story out of Philly, and we love these local stories.
No, absolutely. Our friendly neighbors to the west. And Jay, did you have any other examples that you want to highlight?
I mean, we have companies like Freshly and Daily Harvest that are New York-based companies, that, are considered essential in a lot of ways. They deliver healthy food right to your door on a schedule, and they've done, they both have been exceptional companies even before this, thing, and they've maintained that momentum because they're both they're both products that people need to maintain a healthy lifestyle. So that's another example of, two companies in our tri-state area that have done really well and have maintained an advantage during this period.
Right. So we have a question from Tom about what areas do you look to invest right now during and post this pandemic? Are there any areas which are of more interest to you besides, as you noted, essentiality in e-commerce?
Yeah, for us, it's essential e-commerce, which would include companies like Ro Health, also a New York company. And that company also intersects with a second, which is delivered health services, which would include telemedicine. So we're in Ro Health and Doctor on Demand. So delivered health services is incredible right now, and I think will sustain, because I think once people go to telemedicine, they don't go back. I mean, they don't go back unless they have to see a doctor or get their vitals taken. And increasingly, I think we're going to be able to take vitals where the patient is. Essential enterprise, this would be deep tech that enables enterprise to do more and to do more with a distributed workforce. So it'd be collaboration, robotics, automation. There we're in Gecko Robotics, or in essential things like authentication, identity, fraud protection. And there we're in a New York company called SoPure. And then I think we're closely looking at education and future of work as a new category for us, which we had heretofore not invested in. We're staying away from entertainment, although I think that's also a really great category. And then I think I like everything Jay invests in. So let's hear about those.
I mean, I think, one of the categories I would say like that we're probably not going to be looking as much on is like the luxury category. I mean, whereas before we looked at, luxury ideas and stuff like that, and we would, go deep, we might not be doing that as much because we don't think, they'll be as critical need of type of companies. But, health and wellness is definitely a category that we'll be doubling down on over here. I think, we haven't looked very much at the education space, but that's something that we should look at because there's going to be a lot of changes and innovation on the education front that's going to be happening. We do talk a lot about like, hey, what does the future of work look like? Like, is there an opportunity there? Like, what does the future home office look like, right? Because that became all of a sudden very important, right? And what does future furniture look like for home and, kids and whatnot? So, any startup that comes out and says, hey, we have a unique take on, how we're designing home offices, we would want to have a conversation with them over there. So, I think, there are categories that we probably have now said we're not going to touch, like the luxury category or maybe the travel category, because it might be a while before there's something meaningful to invest in there. But categories like health and work from home and, telemedicine, we might be talking to a couple of companies in that space because, there's a lot of opportunity there. And people now have become comfortable with that over here. Like, it's become something where they don't think of it as like, I need to see the doctor. If it's a very specific thing, like if I'm looking for a dermatologist, can I take a good enough picture of my skin issue or rash? And they can give me saying, okay, this is what it is. And please, here's a prescription for this. And that prescription gets delivered the next day through mail. That's a good experience right there. And it might be better for the health system as well too.
Right. Thanks for that. So I have another question, but before I get to it, I want to thank Esther Surdin for being online and covering New Jersey tech. She's done a great job and for many years, and we're lucky to have her. So there's a question from Sarah about what states can do, right? I know Brian mentioned it earlier. I know you both have been active in talking to the governor and the administration on how they can make New Jersey more attractive. Can you now we're in a pandemic where states are even more challenged, and that might be a severe understatement, budget-wise. What can New Jersey or other states do to attract more entrepreneurs?
Well, there are a bunch of things that Jay's worked on with the governor and his team that I'll let him speak to. But I still think New Jersey has a brand problem. I grew up in New Jersey. I built a company in New Jersey, but I spent most of my career in New York and the Bay Area. And I just think that somehow New Jersey needs to replicate the kind of collegiality and intense founder gatherings and meeting places that you have in San Francisco, Silicon Valley, and New York, and Austin, and Boston, and New Jersey could, but we don't yet. And I'm not sure how to solve that problem. I also think in New Jersey, everybody in New Jersey wears ties and polyester way too much. No one in Silicon Valley has a tie. So I think we got to get rid of that tie and polyester image completely and utterly, or no one's going to come here. I know that may sound ridiculous, but I think everything is signaling. And then we need to attract more capital. There's very few VCs in New Jersey. You know, there's a stalwart multi-stage fund like Edison, who are a real anchor. And then there's emerging superstars like Jay and Newark Venture Partners. There's not much else. I mean, I'm not mentioning every single VC in New Jersey. There's New Tech Council VC. There's others. But we gotta attract venture capitals to live in New Jersey, work in New Jersey, invest in New Jersey. And finally, and I think this is the really biggest piece, is education and the education of founders. You know, we export the talent. New Jersey, my kid's going to the top STEM school in the country. It's a high school in Monmouth County. And New Jersey has like 5 or 6 schools in the top 20 in STEM. And you know what? They're all going to go to out-of-state colleges, and they're all going to go to Silicon Valley or Toronto or Boston, I think, the way things are going. And so it's that talent drain that we really need to work with. And one more last idea on that is New Jersey has a tremendous diaspora of talent. I mean, if you look in professional sports, entertainment, comic, and entrepreneurs, New Jersey has outpunched its population and weight class in super successful founders. Jeff Bezos was educated in Princeton and largely came up in New Jersey, right? So I think we need to tap our diaspora because, you know, once a Jersey guy or gal, always. How about you, Jay? What do you think?
I think if we were to talk, you know, statewide, any state in general, I think especially New Jersey, I think the first important thing is that, you know, the local government needs to really show that they are pro-growth, pro-innovation focused, and you know, not maybe focused on big companies. For example, Detroit's a good example. Like they were so focused on the big car companies for so long that there's very little innovation capital happening over there right now. Whereas places like Silicon Valley, Austin, Texas, for example, have really gone the route of like, hey, we're pro-growth, pro-startup, pro-young companies. That's important for states to really give that signaling over there. Like, for example, Iowa's trying to do that a lot right nowadays. And I think, you know, New Jersey's done a very good job of that start right now with Governor Murphy's administration, because everything that he's doing with the EDA is focused on how do we grow and promote the younger companies, and how do we let the younger companies become the next big, you know, elephants in the room down the road. And, you know, I remember I was at a signing event with Roy Lamanna, who's the CEO of Video, with the governor, where the governor was, you know, tasking the EDA to reform to, you know, focus a lot stronger on younger companies. So I think that's number one. Number two is you got to give the right incentives for founders to want to be there. And what do founders want? Access to capital. New Jersey, you know, one of the things that, you know, really when I talk to some people in the life sciences industry in New Jersey, life sciences was early stage startups in Jersey for life sciences was New Jersey was a leader in it. Now it's not even number 5 in there anymore, basically, right? Like it's lost a lot of its leadership and venture dollars to places like San Diego and Silicon Valley and Boston. And the venture capital is the same way. Like we've lost a lot of venture capital dollars to other states. We can bring that back, but you know, founders need to know that the access to capital is here, that VCs will invest in a Jersey-based startup, and the founders will do that if they feel like they could hire the right talent pool, which New Jersey has a great talent pool, but just like our high school football players who go on and win national championships for other states, you know, they're not staying in state. So we got to make, you know, people feel excited about staying in state and working in companies here that are innovative over here. And, you know, you need to have programs that promote success over here. Like, you know, I think, you know, New York has a program where I think if, I forget the exact name of the law, but like, it's a federal law saying that, hey, if you do a startup and, you know, you run the startup for 5 years, you get a capital gains tax exemption for the first 10 years. And then New York State just said, you know what, we'll match that at the state level. So you're not paying the state taxes either on that first amount of capital gains victory. And that's promoting people to want to do startups. That's promoting people to want to be in a certain geography. If we have more programs like that in our state coming out, it'll help founders to be like, hey, we'll, do that. Because a lot of the complaints I hear when I talk to founders in New York City saying, hey, you need to consider Jersey, a lot of them will say from an economic standpoint, it's almost a wash, or it's actually a little bit better in New York City. So when I have that competition, we have to just make our programs much more better for people to want to come here.
Absolutely. And I want to thank both of you for your leadership in helping the administration move toward a more entrepreneurship friendly state environment. So we have a question still. If anyone has questions, we're on our sort of home stretch here. I just want to note this question from Jason. FinTech is a big area in New Jersey, as everyone knows, in the region. And the question relates to a financial app. Does a financial app geared toward nudging users or clients in better managing their finances, not through the numbers, but through cognitive behavioral game design and behavioral economics, meet the essentiality requirement?
Yeah, I already answered. My quick 2 cents are, and then I want to hear Jay's, is, an app like this, the quicker you can produce outcomes, results in your target populations, the better, right?
Yeah.
So I think moving the needle quickly in the behavior is the hard part here. Then I think, basically if those changes in behavior drive outcomes for financial institutions, you can get funded.
Yeah, I think, in an app environment, especially an app like this where you're trying to do fintech and you need adoption and stickiness, it's gonna come down to how fast you can grow the user base and how sticky that user base is. So, a lot of VCs I talk to that invest specifically in apps and mobile experiences all say that they don't invest they're not going to invest early in any app because it doesn't take that much effort to launch an app and do anything nowadays, but they will care about like how sticky the app is and how the engagement is. And what I would say in that type of app here is like, don't go saying, hey, I want to launch this nationwide. Find a core audience, like 500 people in one state that could become your customers, and they're sticky and they'll engage and they'll give you feedback. And if you could get that loop going really successfully, fundraising can happen very easily.
Great. All right, thanks. So here's a question from Helen. There's a lot of talk lately on the opportunities in the work from home space, which you folks mentioned. But to a degree, this seems dependent on how long the COVID-19 virus lasts, where physical gatherings, work environments will return to some kind of normal after this is over. So is there a need to distinguish between short-term opportunities led by COVID versus longer-term ones? And how does one go about doing so?
On the early stage side, I mean, especially the early stage companies we're involved in, we talk to a lot of them. A lot of them are saying that they haven't seen a drop in productivity from people working from home. Now, when post-pandemic, if we were to go 12 months out and hopefully the world's in a much better place, I think, the question will be like, a lot of founders will be like, hey, can I have half the office footprint, have my employees come in on staggered schedules, and they're happier because they're working from home 2-3 days a week and they come into the office 2-3 days a week. So they get a nice blend over here. So I think a lot of founders I've talked to have, whether in our portfolio or not in our portfolio, have said, I like this. This is actually working for us. And it's not that hard as long as we have good communication, stand-up morning meetings and stuff like that. So I don't think this is going to go away. This is a trend that's going to stay here. But you do want to think about it like, hey, what does the world look like a year from now? I do think that people have a smaller office footprint, especially in New York. And I do think that there will be staggered schedules over here because, and it might have nothing to do with COVID. It might be just because it's more productive and more economically, financially better for companies.
Yeah, so I'm imprinted with the technology adoption curve as expressed by Jeffrey Moore in Crossing the Chasm and Inside the Tornado. And there's no entrepreneur in the world that should not read the chapter on Crossing the Chasm Inside the Tornado and ingest and know that paradigm completely. And what it says is that there's different segments of the population who are early adopters, early majority, mid-majority, late majority. And this behavior by the masses is pretty baked in. And I think a crisis like COVID, all it really does is it shifts, say, e-commerce in the United States, which was stuck in the maybe 12% of the population range, and it essentially doubles it to 24% overnight. And guess what? Those 24% are all following each other. They're not going back, ever. Now, yes, there are some things that will come back to a quote unquote a new normal. One has to be smart about that. But when you see these large mass adoptions of technologies that are inherently more cost efficient and convenient, they're not going to go back. And we believe that's true in telemedicine, essential e-commerce, workforce automation, work from home, housing, and a bunch of areas. So I'd become a student of the technology adoption curve and try to apply it as best you can. Just for example, in Asia, e-commerce and mobile commerce is 2x what it is in the United States, right? Now, due to COVID, the United States is caught up. We're not going back, right? It's come up to that level and sustained in Asia at that level, and now that's going to be the new level in the United States. And I think that means that all these companies, public and private, still have a lot of headroom if they can maintain their dominance.
Great. One last question related to that. Jack asked, what does that mean for real estate, commercial real estate? I know that's not maybe your focus areas, but take out your crystal ball. Curious to get your thoughts on that in general. I know New Jersey may benefit from that, folks moving out of the city and coming back to the suburbs. But what are your thoughts on that? And this would be the last question.
I think, I think New Jersey will benefit long-term because I think, people will want more office space that's bigger and easier to get to with a car versus public transportation. I do think that New York will go through a little bit of it will have challenges. And a lot of people that I know personally in the commercial real estate space are saying that there are going to be challenges in places like New York City and San Francisco. And one of the things that they say is initially a lot of people said, oh, you know what, we'll just decrease our foot space by half in New York City, and then we'll have people working remotely. And then people are like, wait a minute, if we reduce it by half, people are still going to be crunched up near each other in order to follow social distancing guidelines being recommended. We might need to keep the same footprint, but have people just be more spread out. So they're like, that doesn't make any sense for us to keep that type of thing going. So, there might be a lot of interesting things that happen in the next couple of months with this.
So, we have a lot of real estate investors in our fund, and I think there's a great deal of uncertainty about asset prices and rents and so forth and demand going into the future. I think the only safe haven is tech, and you see that shows up loud and clear in the public market, right? Tech is the new gold, right? That's the place to put your money if you have a 5-year horizon and you don't want to be subject to vast market swings, and there's going to be more of those. So in things like real estate, which are highly illiquid and subject to market demands, it's a very risky investment now. So that's one thing, that growth tech is the new gold, and we're happy to be lucky enough to be in that space. Secondly, I don't believe in the mass exodus from cities. I think over a 10-year period, cities will continue to win for the same reason they've won over the last 20 years. They are great places in which to rub shoulders with a very diverse set of people and become smarter and build smarter organizations, smarter families, smarter schools. So I think that the victory of the city is here to stay. It may get a little setback here. I think the only way I'd bet against cities is if there's civil unrest and mass unemployment or supply chain challenges, which hopefully we will sidestep. That being said, I think owning a home in a nice place like the Poconos or the Jersey Shore is probably a good thing too. Anyway, that's my quick thoughts on where the opportunities are.
Yeah, thanks for that, Brian. So I feel smarter, speaking of feeling smarter after this conversation, because you guys have shared some really great insights. So we're going to end, as we normally do, with some poetry or proverbs. So let's start with you, Jay. Go ahead.
All right. The one I thought of today is the old proverb from Punjab, India, which is where I was born. And Punjab means land of 5 rivers. So it's actually, it's a land that has 5 rivers flowing through it.
Oh, wow.
And my dad told me this proverb, over a decade ago when we were in Seattle at Mount Rainier overlooking a waterfall that was, going through a bridge. And he said that in this proverb, when, in the US, we have this saying like water under the bridge, right? And in Punjab, the saying is that, when you look at water flowing under a bridge, you realize that the water will only flow there once like that. It will never come back to that bridge the way it is again. And, it's gone once it's gone. And the real meaning behind that is you must understand that sometimes things only happen once in life and each moment is precious, and to, cherish each moment. And nothing gave a lot of people in Punjab that idea more than when they're standing over one of the 5 rivers on a bridge and watching the water flow, realizing that specific water that's flowing will probably never flow under that bridge again for all of eternity.
Thank you. Brian?
That's great. And, a real irony, Jay, is I live in the Two River area. And I hope you'll all visit the Two River area. It's in Monmouth County near where Jay and I live. The only difference from the Punjabi proverb is its title. So the water is constantly going back and forth under the bridge. Anyway, on that note, I was an Irish literature major, so I had to do Yeats. And in honor of the civil unrest and the protests that we've seen, I want to read out a poem by Yeats, or excerpt from Easter 1916, which was about a largely white nation rising up against white tyranny in Ireland, and Ireland soon thereafter won their freedom, but not without the loss of many martyrs who acted up in 1916. So this is from Easter 1916, and he writes, "I write it out in a verse, MacDonough and McBride and Connolly and Pierce, now and in time to be, wherever green is worn, are changed utterly. A terrible beauty is born."
Wonderful. Thank you so much, Brian. And thank you, Jay and Brian, for being with us today.